Welcome to Global Education Webinar powered by Global Finance Board.
Welcome everyone. Thank you for attending this webinar. As all of you know, this topic of today is going to be financial and distributional models. My name is Javier Tatay. I'm team leader of the Global Finance Board of Controlling and Business Intelligence.
I am Ram Martinez. I will be the one who's going to deliver this session for you guys. So this is the content. We're going to explain the purpose of financial model, also the purpose of distributional model. So we're going to differentiate what are those two. Second is next would be the models at national and local level. Then we're going to talk about before starting, meaning what should you do before doing or starting to create a financial model. Next would be we're going to talk about different types of distributional model, other information, and also we're going to do the workspace. Okay, so I hope you guys are in front of your laptop, because for this workspace you will have a hands-on simulation. Alright, so for the first one, we're going to talk about the financial model. The financial model, it is used to split the total amounts of expenses. The expenses will be divided between MCs and LCs, and do not confuse this with a distributional model. So financial model, in every entity there will always be a national budget, right? So the national budget, you need to know how would you be able to achieve the national budget and still make the entities sustainable in terms of their performance, finances, and cash flow. So we have the concept of a financial model, so that we'll know how much is gonna be the split of total expenses that would be divided between MC and LCs, so that in terms of the revenue generation, it will still be sustainable. There must also be an agreement between MC and LCs to distribute the percentage. Usually the agreement is done by the approval of the board or through legislation during national meetings. Financial model is linked with the budget, so it is linked with the budget because it is all about the cash flow, incomes, and expenses between MC and LCs. Now distributional model. Distributional model explains how the expenses that the LCs needs to cover is going to be divided. So once there is a split between the MC and the LCs, you're going to know how would you split this percentage that's going to be for the LCs to each of the LC. So this is where we're going to explain the calculation of the LC fee. This also includes different variables such as exchanges, revenues, even members as well. Next would be distributional modeling. Entails the development of a simplified mathematical model. It's usually in an Excel sheet. To see it simply, so we got the national budget, right? Now this national budget is going to be divided between the MC and the LCs. So in terms of the percentage, it depends how the agreement came upon within the national level. Now once there is a split for the LCs, it needs to be divided to each of the LC1, 2, 3, etc. And this is computed through the distribution model. Now question, how about what's gonna be the revenue generation that's gonna be shared for the MC? As for the MC, their revenue generation is usually composed of of exchange fee contribution, which is the per share or the percentage in each of the exchanges that the MC gets. PD revenue through national sales and partnerships, events, projects, conferences such as Youth Speak Forum or NATCO, and even donations, grants, and other sources of revenue. Now, I'm going to briefly talk about the concept of a fund model. So this is where how does the income is going to be divided into different sources of expenses. So this is almost the same concept as the financial model. The only financial model and distribution model, the only difference is that we're going to tackle the different types of expenses. So within the LC, for most LCs, this is gonna be more relevant in a sense that once the LC share is computed, the LCs would also need to talk about how to balance all of the other expenses, knowing that you also need to cover the affiliation or DMs, or the one that you're going to cover through the national budget. So first, you need to determine your main focus for your term and where most of your incomes go. Will you focus in R&R investments through this year or in your marketing activities? Do you want to create reserves for your LC's future? Whatever the answer, it depends on you. Now, you have to be careful. The percentage of money in each fund depends on LC goals and reality. If some LC would want to create reserves in the next year or two, they will probably make sure that there would be an increase in percentage in that fund to 30 to 40%. If LC would want to spend more R&R, then they have to put more in the investment. So this is how it looks like. The fund model is like a bucket of water where you're going to balance which is needed in different buckets. So the one that is pouring, this is the income, the total income that you receive. Then of course you have to make sure that you would be able to pay up the affiliation fee, which is the one that is covered through the distribution model or the financial model. Then there is the operational bucket, marketing, investment, reserves, sustainability. So let me explain each one. So let's go first with the investments. Investments, of course, as we know it, if we don't invest in people and operations, we cannot expect to grow. So this is more on the expenses that we directly incur through exchanges. This also involves as well trainings for our HR for our members. So these expenses, we call it as investments because we expect return from it, so that we can grow our exchanges. Reserves fund, this is more of a long-term fund where this is measured by months of financial reserves. So you can see if LC is operating healthy or not. Most of the LCs doesn't really have reserves, mainly because they have to prioritize other expenses first. But however, without that much reserves, this would lead us to a very dangerous and high risk situation which we don't often realize. Most of the time, this could come from conference losses or other accidents during the exchange realization. Having enough amount of reserves is trying to save money for this fund must be a priority of LCs in the long run. Product sustainability, of course, we need to keep our products sustainable. So this is more related towards our exchanges to make sure that we have special product sustainability, for example in IGV, to keep it sustainable and still operating in the long run. So this could be from gift items to partners to Yuletide seasons, or other customer relation activities or marketing activities. Affiliation fund, this is where the distribution model also connected earlier. So this is the fixed and variable affiliation cost that is calculated, and when you're going to look at the MC budget, you know which costs are fixed and which costs are variable, which we are going to talk more about later on. And operational fund, this is more on what we need to cover if we want to support our operations, and without this money we're not going to last long. This is usually involves to apartments with exchange participants, such as with EPs. And then marketing, for example, this is usually involves with OGX. So this is also related to the return of investments for which we have, so that we can pursue and expand how we are doing with OGX. So models at national and local level. So in the national level, you will be able to see the financial model. So for example, there are splits in different expenses like National Secretariat, marketing, and operations. But also, you need to note that you should establish distribution models. All right, yes. Thank you so much as well, Elias. Okay, I thought you were going to ask a question. That's why I kind of paused. All right. So going back for the distribution models, see examples for the next session. I'm going to talk about it in the next slide. In the local level, most of the time you would only work with distribution models. So you need to know how the LC expenses are going to be distributed among different departments. So before starting in creating or planning your new model, you need to first list all of the types of costs, meaning you need to determine what should be your budget, what are the composition specific details of it, and where would these resources would come and go. For example, for exchange revenue, you need to know would this be from IGV, and if it's from IGV, which partners. So you need to be quite specific. Next would be you need to decide the purpose to force LCs to grow, being able to benefit specific products, balance between big and small LCs. So these are the different factors you need to know. The financial model is not only there to be able to cover how much is needed through the national budget, but it should also force your LCs to grow, because this would compel the performance or the operations that, okay, this is the minimum that I need to achieve. I need to improve or achieve bigger than this. Next is that this would be able to benefit specific products. Why? Because since this is related to the budget, there are different parts in the budget which are investments, marketing, operations, and other events and projects, which would of course relate to improve and to market our products. And the model should be able to balance between big and small entities. For most entities, they have different growth levels in LCs. So there are small expansions, LCs under LCs that are still about to grow, and then there are LCs who are holistically sustainable already. And most of the time, a lot of the national entities have a huge gap between the small LCs and the big LCs in terms of their operations. So some LCs would only have around 10 exchanges, while their co-LCs would have around 100 or 150 exchanges, which is a huge gap. Switching from one model to another fast, specifying on fast, is not a good signal considering before the implementing all possible scenarios. So it's not good to do it immediately or fast but exception for some rare cases, mainly because you need to do some change management. Also, in terms of their performance, you need to plan it out. How would it be sustainable in terms of your exchanges and in terms of your members' performance? Next is you need to understand how your entity works. So which product revenues come more or come less? Where are your expenses go? Which future projects do you have? And what are the urgent expenses that you need to complete? Then you need to take a look carefully to your budget, as this is your guide to know your costs and expected revenues. So after all of the listing, deciding the purpose, switching, understanding, you need to of course take a look back and review it all over again. So types of distributional models. First is fixed cost. So fixed cost, it is the simplest type of distribution model. It is recommended to small entities. So all LCs pay the same amount of money. So for example, if the LC shared in the national budget is around 1,000 euros, then you only have 10 LCs, then each of the LCs needs to be able to cover 100 euros. Next would be all LCs, divide the total cost by the number of LCs, which I explained earlier, then divide the result by the number of LC fees that you want to have. It does not take into account exchange reality, particularly expansions of these entities do not have the same operation level as the bigger ones. So this is most recommended to the younger entities. Now, fixed amount differentiated. This is a bit more complicated or complex because this takes take into consideration that the fixed amount is distributed based on different drivers such as exchanges, membership, revenues, etc. So this is the combination of fixed cost and variable based. Now, variable based this is where you take into account income generated purely. Most of the time is usually just exchanges and just a very small amount to other variable drivers, so usually members. This would create huge differences between LCs if the gap between exchanges are significant. So if you're going to do variable base and then and since variable base is purely calculated based usually on exchanges, and then all your LCs in your entity have very significant cap, then the budget between those then the fees in each of the LCs would also be directly significantly different as well. So ideally, this is ideal if LC's operations are within the same exchange bracket. So if an entity who have LCs whose exchange would just vary between 50 to 70 exchanges, compared to entities who have LCs who have exchange numbers that range from 20 to 100, then the variable base model would be a lot better to the former. Now, those types of models that I just introduced are usually the common ones. There are you can make your models a lot more complicated. You can use more drivers, as these are not the only types of models that you could use. There are a lot of distribution models, but those are the two main groups. You can also combine them, one fixed part plus one variable part. Also keep in mind which purpose do you want to have and what is relevant for your entity. Alright, so that is the last slide of this presentation. Now we're going to move to our workspace. Okay? And yes, guys, we are going to share the output after the session. So I pasted the spreadsheet link in the chat. Please tell me if you guys are already in the spreadsheet. Alright, okay. I believe everyone is already in the spreadsheet. So first is that you need to create a copy of each of the tabs and write your name and the country into one worksheet. And then before you guys start, allow me to explain to you what are the tasks. So first you need to use the tabs for you to experiment what are the different types of models. Check the calculations. What can you conclude out of the data? Are you managing the finances successfully? And so that you would also think what can be the possible action steps to ensure a sustainable financial model. So let me just go and briefly explain what are the composition of the tabs. So in the tabs, there are three different types of models already made based from the Excel sheet. So the first part at the leftmost side is the fixed distribution. So you can use this and then create different types of LC shares based on the amount. Next would be the fixed and variable distribution. So this is where you combined the MC based on fixed part and the variable part. And then at the rightmost side, just go and scroll over the very right side, is the variable distribution. So variable distribution is purely based on exchange or the drivers that we could count, which are usually involves people as well. So for this workspace, you can use this one so that you can try and experiment different numbers. Remember to only do your inputs on the yellow fields Also, you can rename the names of the LCs as well at the right side. Also, guys, I recommend that you try to input different exchange numbers. So if you already had your budget and list of goals, I recommend that you try to input that in the exchange numbers fields. And then also, if you have a list of number of members, you could try it out as well. Also, if you guys want to experiment a lot more, check out the percentages fields, so that if you're going to change the percentage, what do you think would be the changes with the fees and how much should be contributed by the LC. Okay, so we got a question. One thing in the fixed and variable model, the fixed part, if we have something, it is divided equally among the LCs. Okay, so for this one, it's more of that the fixed part already, the fixed part is divided equally among the LCs, and then the rest of the variable part is not. In the fixed and variable models, so the way it is computed is that for the fixed, once you already had the percentage for the fixed amount, it's going to be divided equally among all of the LCs, while the rest of the percentage that's going to be calculated based on variable, that's gonna be based on the exchanges. Oh, by the way, guys, I just noticed something with the formulas, with the calculation. So I'm copy pasting them now in each of the sheet. So the calculation is related to the fixed contribution. Next is May. What should be included in the fixed cost? AIV. Okay. So fixed costs, I think this is more on the difference between the budget and the financial. So in the model, distribution model, I mean, is that the fixed cost is more on this is base that is divided equally among all of the LCs based on the model. But your question is more related to the fixed cost in the budget. So the ones that you listed there are the fixed costs related to the budget. Now, question: what would be the ideal percentage that would be covered in the fixed cost part for the distribution model? I would say that you should have the minimum percentage of the fixed costs, ideally related to the fixed cost in the budget. So for example, in the budget, your fixed costs would compose of around 50%. But so you could also, in your distribution model, you could have the fixed costs also be 50%. Of course, this would depend on the performance and the operations, revenue generation of the entity. So there are other variables that would also be needed to be taken into consideration. What kind of benefits can we give to EID? If you have 10 LCs, but one of them is entity in debt, that means you're going to compute the LC fees or national fees, if depends on your name. You're going to calculate only for the 9 LCs. So question, what's gonna be paid by the entity in debt? Then their payment would only be the amount of the debt itself. So what happens is that if you're going to look at it, from the 10 LCs, since one of them is in debt, the amount that should be paid by the EID is divided to the 9 entities. So in terms of the fixed cost, well, it's not necessarily 100% of the fixed cost in the budget the is gonna be directly proportionate to how much should be in the distribution model. You could do prioritization. So you need to check what are the costs that you need to prioritize. Most of the time, the fixed costs that you would need to prioritize are of course related to legalities and office. In terms of the ones related to HR, you could have a certain percentage of it that's gonna be covered that's gonna be covered fixed in the distribution model. In terms of the um, visas and travel expenses for for international conferences, international summits, that's the one that you could also have a certain percentage. Of course, AI fee and ICIPM fee, that should be 100% be covered by through fixed costs as well.
Brazil has target payment for each LC. So if the LC exceeds the target, they don't pay the plus. For example, if MC target for Rio has 100, I don't know, euros, let's say, and Rio approves 120, whatever, they pay only 100, which means that this can be like a driver of exchange, that whatever you do in plus, it's your own, like yeah, in your
Whatever
own
you do with the
benefit
surplus, you can keep it.
exactly. So what
Actually, I heard of that type of strategy. Um, I think that it's good in a sense that the way that the mindset work in this entity is that okay, I want to strive more so that I would keep this all of this revenue to myself. However, of course, it depends on the level of each entity, and also in terms of the culture, because there most of the time it's they wouldn't not most of the time, there are times that some would just see it, okay, strategy is good, but I see it as an option. So if I don't do that well, then it's fine because I will still be able to contribute to to the na- the national budget. But if I wanted to make my entity a lot more sustainable, then this type of strategy is is advantageous for me. Um, I think that type of strategy would be good if the MC is already sustainable, meaning the MC already has a lot of reserves that they don't need that much money anymore to flow from the LCs.